Welcome to the club. My name is John, and I will be your host for this meeting. In this meeting, we're going to be talking about the 1099 statements that you will be receiving as an investor or as a retiree. The 1099s typically is how these different institutions report earnings and information to the Internal Revenue Service. So when these statements come in, it is important and it can be helpful to look them over and save them. And you have two methods. You can do the hole punching method, put it in a big binder like I do, or you may just save them in the cloud. But it would be advisable to take a look at these documents as they come in. And that's what the series is really about, to help people who are just getting started out in the investing to know a little bit about things that we've covered, like the statements that come in, the prospectuses that allow you to look at your investments, see how they're doing, what the holdings are. It's a whole pieces that you need to know so that you don't get yourself in trouble with the taxes. And in my background, I have owned individual stocks. I've had stock awards. I've been part of employee stock purchase programs. I have been a part of IPOs where I was told, well, there may not be any shares for you, and I get that from the financial advisors all the time. But I've gotten involved in some pretty good IPOs, so I have a little experience, and I just want to make sure that I'm delivering some information that a new investor may find valuable, as well as some of the other investors who are seasoned or out here or looking to move on and do different things. So we're just going to go jump right into it. Now, typically, what I get when I leave an employer is the 401k or 403b. I usually roll it over. And what happens is when that rollover takes place, there's a document. I have it right here, and I'm just going to read it to you. This is called the 1099R, and it says distribution form, pensions, annuities, retirement or profit sharing plans, IRAs, insurance contracts. So what they're talking about here, any distribution from these retirement accounts, they report the income because some of the income is taxable. In this case here, this is a statement from 2012 from a employer, which was a recycling company I worked for. And I rolled over the amount that I had, or the balance in the individual retirement account. And it was $10,946.15. Now, I started my employment there in right around Christmas of 2007. I maintained that employment for 5 years and 4 or 5 months or something like that. But anyway, this job, I wasn't making a whole lot of money. I think I started off at 35,000. After 5 years, I finished at 40,000. There were some bonuses in it. I only got two pay raises during that time, so that's all I can muster off of, 35, $40,000 salary, is to save about a couple grand out of my base salary. And the match was pretty poor. It was like uh, of the first 2%, it was 50%. But this document right here is what I got when I rolled it over from their plan, which was Fidelity, over into a Fidelity IRA that I can control. This is significant for me because I did this in 2012, and this account, as of today, has $108,000 in it. So I was able to grow that. Um, I only rolled money into that account one other time, and that was in 2019. I think it was July. I put about 35,000 from another employer's plan that didn't have a very good match. So you could see how, by holding on these papers, I can see how my growth is going. But that's one of the examples. So a lot of the seniors are getting these as their pension plans pay out, as your annuities pay out, and you need all this kind of documentation. Okay, we're going to take a look at a trade confirmation here. As you start investing, if you tinker with individual stocks like I decided to do, um, you will get these trade confirmations, and it's going to be highly advisable to keep these around or have access to them for at least 7 years in case you get audited. So here we have a purchase of 300 shares of a leaf at 90 cents. $270 is what I paid for it. 495 was commission back then. And this is a medical marijuana company. I think they were based out of Canada. And I felt that there was a potential for this to go somewhere eventually. And so I invested this $270. And after I bought it, the value of the stock started going down. It just kept going down. And eventually, one day in my account, I looked up and it was no longer listed. And come to find out, they went out of business or got bought out. But anyway, I got a hold of E Trade, and we wound up making this transaction here on 9/17. You see, I did it last year, and the price is zero. So I paid 90 cents, but I wound up dumping it at zero. So I made no money. So I had a loss of $270. So that's why you want to keep these trade confirmations so that you can do your taxes. And I took this loss this year, and now it's done. $270 comes off of my taxes. I lost that money. It's gone. And sometimes this happens when you deal with individual stocks. They will sometimes these companies they go bankrupt, they get bought out, the shares either get become worthless. So this is what you call a worthless stock. Um, it'll happen. Mutual funds are a little bit more safe, but I want to show you guys this. So I'm going to stop sharing here, and I'm going to bring up another one called a 1099-B, which has all transactions from a your brokerage account, all the activity, and I'll talk about that. Okay, so stick with me. Okay, so this is a 1099-B, and this is the form that your brokerage account or your custodian or your financial institution will use to report the proceeds from sales and transactions related to your investments. This is from an actively managed fund. It was a 60/40, and I put 20 grand in it, and I thought I would go ahead and try it out and see how it works when the market changes. It had some municipal bonds and things in it that didn't fare very well. And in 2022, that 20 grand, yeah, I got it up to 20,700. It dropped to 17,000. I just couldn't take it. And I finally got out of it. When I sold it, this is what they gave me. And the year 2023 is when I got this. And look at all these little micro transactions here. 0.014 sold. It shows acquired date on July 2022 and a sale date of 5/23. 65 cents proceed. The cost base is 60 cent. 0.1 cent loss. Now the IRS, if it's 49 cents or below, that's a zero. If it's 50 cents or above, it rounds up to the next dollar. So all these little micro transactions, like these right here, I would have not even keyed these in. But the ones that were at either a loss of a whole dollar or above, I had to key all these in. It took me 5 hours. This is, like I said, I got out of it. I didn't even call those guys up to ask them what was going on. I'll never do it again. But this is an example of the type of paper you will get. And I had to do a form 8949. All of these I had to put in. I got it to balance, and I submitted my taxes, and it all, the IRS accepted it. But this is just an example of what you can expect if you're going to be trying to be a day trader, buying and selling stocks with what I just covered. Okay. So I'm going to come back. We're going to talk about the employee stock purchase plan, stock awards, and maybe possibly stock plans. Thanks. Okay, so last thing we're going to talk about is the employee stock purchase program. Typically, they will withdraw money out of your paycheck, and at a certain date, they will take that money and purchase on your behalf a set number of shares that corresponds to the amount you have. Sometimes they'll do it at 85% of the value or some other percentage of the closing price as a service to you as an employee. Other times you may receive a bonus in the form of a stock award where you will be awarded this. Now, you keep the paperwork for that as well because it may have language that says you can't do anything. You must hold this for 2 years. After 2 years, you will be informed when it's okay for you to sell the shares. That's not always a great deal because sometimes the stock could be valued at a certain amount on the day they hand it to you. On the day you actually go to execute it, could be half, or in some cases, a company could go out of business, like it did in my case on one of my stock awards. Um, the stock options and stock plans, that is going to be individual for each employer. I don't have much on that other than the employee stock purchase program as well as the stock awards. I got a couple of those at one of the places I work for, and I actually still have one that I have the paperwork. They said it was lifted. My broker says it's not. It was still restricted, and then it's a total loss. I couldn't sell it or do anything. I can't even write it off. I have to write them and say, "Hey, this is what was happened. Can you please lift it?" And I don't even know because that company is no longer in business. It's just another loss. So you could see, if you listen to me, how badly individual stocks can go. It has not always been. I've done quite well on some of the other stocks: Apple, uh, John Hancock, UPS, and a couple other small ones. But yeah, it's like every one out of three in stock investments can go bad. But anyway, I'm going to end this meeting on that note. I just want to make sure you are fully aware of how important when it comes to investing, documentation is key to you when it comes to your taxes and preparation and reviewing your investments. Like the investment I got here, the 10 grand. I feel good about that. I did not feel good 10 years ago. I was like, man, you're barely going to have 100 grand because nothing was growing for me. Okay. So this is John. I'm going to end the meeting and give me some likes and think about subscribing as well as give me some feedback. Thank you.